Three new residential districts have been unveiled in the URA's Draft Master Plan 2013. The plan charts Singapore's development in the medium term, and this is reviewed every 5 years. So here's a look at some of the key housing plans in store. Looking at the whole of Singapore, the URA has safeguarded enough land for 500,000 housing units, a large proportion of which will go to public housing. As mentioned earlier, Marina South, Kampong Bugis and a new Holland Village extension will comprise 3 new residential precincts, which could yield 14,500 new homes. Marina South and Kampong Bugis are solely for private housing. Altogether, that's about 13,000 homes, and the Holland Village extension will likely be a mix of public and private homes, about 1,500 units. Now here's a closer look at a map of Holland Village, the extension. 3 separate plots have been set aside for a mix of low, mid and high-rise developments. Now, the development of these 3 districts will be spread over the next 10 to 15 years. So for Property Outlook, Ku Swee Yong from Century 21 Singapore, a residential real estate sales organization, is here with me in studio. So Swee Yong, thank you very much for coming in today. So we mentioned earlier Marina South and Kampong Bugis are both dedicated to private housing. Where do you see demand coming from? 13,000 new homes.
It is too early to tell, especially for Marina South. The plans today do not indicate whether we would first be building the amenities and the commercial facilities and then subsequently tendering out land sites for residential use, or would they be concurrently rolled out, or would residents first go in, enjoy the being next to Gardens by the Bay, and then subsequently we put in more retail and commercial facilities. The piece at Kampong Bugis is actually not that new. We already have indications in the previous master plans that the riverfront precinct around Kallang River would be developed. I guess in this master plan, the government is going to stress and probably then release land on the confirmed sales list in order to get developers to bid for land and build up that location. This ties in very well with the opening of our sports hub and the sports and recreational facilities around the stadium.
So basically a clearer picture for everyone as to what will happen specifically in these areas. But it's the expectation that the buyers will be looking to invest, not actually live in these areas, and you're looking forward down the road in the next 5 to 10 years. Do you actually see the average Singaporean being able to live in a waterfront home?
There are many opportunities to find waterfront homes today. The whole stretch of Punggol is not just Sentosa Cove anymore. We of course originally had Tanjong Ru homes, and now we are adding Kallang River Basin area. So in this location, I would expect maybe a good mix 50-50 foreigners and local Singaporeans, because we are on the fringe of the Kallang HDB estate, and going towards the Lavender side, we already do have some private residential developments there. In Marina South, then depending on what plans come up, I think then the proportion of foreigners there would be higher. Maybe 2/3 to 80% might be foreigners. Foreigners who are expatriates in Singapore, especially working in the financial district, might find that location convenient and within cycling distance of their offices in CBD.
So given our population growth, housing supply of course needs to keep pace. So over the next 5 years, it's projected that about 100,000 new private homes will come up. Do you foresee any potential worries about oversupply?
Within the next 4 to 5 years, definitely there is a worry about oversupply, because the government is at the same time trying to roll out more infrastructure to make sure that the capacity of the infrastructure can easily and comfortably hold our current 5.4 million people. So in the next few years, I wouldn't foresee a lot of a push towards giving out more employment passes, or it would be as and when necessary. So population growth would be a little bit more muted, maybe coming in less than the projected 100,000 headcount per year. But beyond that, we have to build out Singapore towards the vision in the white paper for 6.9 million people, to build out up to 1.9 million housing units. In that case, the short 5 year of potential oversupply threat might be absorbed past 2017, 2018, when the economy and the capacity for infrastructure has improved.
So let's talk about let's talk about public housing now. We've talked about private. Next 5 years, 110,000 public housing units expected to roll out. Should we expect that the housing market will remain tight?
It could still remain tight because while we are looking at the headline numbers of what new HDB flats might be contributed to the total supply stock, we actually are not so able to see how many old HDB flats are going to be renewed, especially those that are going to be demolished under the selective en bloc relocation scheme. So under the SIR scheme, even though there may be an additional 110,000 new HDB home keys that will be issued in the next 5 years, it could well be that the net new supply is only 80,000 because we have to tear down 20,000 of our very old HDB flats.
But then again, there will be more homes built in established estates. They already mentioned Sembawang, Yishun, Hougang, Choa Chu Kang. So we should expect strong demand for that, especially for younger couples.
Yes, but that part is a little bit more easy to manage. The government will be holding the BTO exercises, and if the subscription rate starts to go down, the government would then allow the second timers, the third timers, then to have their choice of picks. And subsequently, if the demand for these applications of new homes really trickle thin, they can stop it and then quicken the pace of the selective en bloc relocation scheme. So on the public housing segment side, I think that the threat of the oversupply is not there. In fact, we are still slightly tight.
Okay, so would you consider the overall draft master plan well balanced in terms of housing needs?
I think it is balanced in terms of housing needs. Today, the signal seems to be there's a lot of work in progress already. The expansion of our expressways, the expansion of our MRT network, and let's get about making sure that that additional capacity for road transport and other utilities infrastructure are done properly. Then we intensify our land use and we bring in more families into Singapore. So we have got to take a look at the next two master plans to know about that.
All right, Swee Yong, hold on a minute. Let's have a look at what's happening to commercial areas, which is related to transport, which you just mentioned. Major commercial clusters will be developed as well, with a greater emphasis on decentralization. So this will bring homes closer to workplaces outside of the city centre. So for a start, the financial district will be expanded. The Marina Bay precinct will add at least 1 million square meters of prime office space to its existing 6.5 million. And away from the central area, the development of the North Coast Innovation Corridor is anchored by the Woodlands Regional Centre. It will have land set aside for SMEs and will also house the first business park cluster in the north. Now, new industrial clusters outside the city centre also planned. Each of these clusters will have a different industry focus and create new opportunities for those living in the area. For example, the Seletar Aerospace Park will create up to 10,000 jobs. So Swee Yong, let's look at the commercial areas. In the next 10 or 15 years, do you see the Woodlands Regional Centre becoming a key commercial cluster as envisioned?
Yes, definitely, but let's roll back the clock a little bit. In 2008, we were also told that we would have a decentralized new commercial centres, Jurong, Woodlands, and then Paya Lebar, to be modelled after the Tampines Financial Commercial Centre. But don't forget that between 2008 and today, we had a global financial crisis. Financial services sector took a big step back. There were retrenchments. Hedge funds industries were affected, for example. Now, we are still rolling out the plans as stipulated in 2008, but it's just on an extended time scale now. So today we see 3 new commercial buildings being built in Jurong East, and in Paya Lebar, 1 commercial building is coming up. We would expect that plan to continue to roll forward. The additional positives about Woodlands that is different from the previous master plan is there's a lot more concrete information now about our linking the MRT system into Johor.
The Thomson Line.
The Thomson Line, and subsequently perhaps the Kuala Lumpur-Singapore Express might end up in Johor and there might be a stop in, but all these are somewhat still speculative now. There would of course be investors and speculators who might want to take a bet on it, but I would say that the bet today might be a little bit early. We want to know more details, maybe coming out of MTI, JTC, about which specific industrial segments might go into some of these business parks in Woodlands before we then place our bets on our investments there.
So overall speculation about Woodlands is promising.
It's promising.
Right. So what,
yes.
what do you see the spillover effect might have on surrounding areas which could potentially benefit?
Surrounding areas in the relatively higher quality residential districts would start from Upper Thomson and would actually also benefit around the Yishun, Admiralty areas. But again, I would really want to know what is the category of industries that are going in there first. Because you could have a wafer fab plant with $1 billion of investments, but the potential number of expatriates that you can lease to who are working in these wafer fab plants might be just 50.
Okay.
Yep.
So let's have a look at the new industrial areas, for example, Seletar, Defu, Lorong Halus and 2 West. Do you see this having any effect on residential prices in the surrounding areas, maybe in the short to the medium term?
In today's announcement, there isn't enough information about the categories of industrial players that would be occupying these spaces. And again, if it is another $500 million investment into a pharmaceuticals plant or in Seletar, an aerospace jet engine plant, for example, it doesn't actually create many jobs that would allow the expatriate renter to actually boom. A very large value investment might generate 100 jobs where each of the expatriate is a very highly qualified person with a high budget, but there are only 100 of them that you can lease out to.
All right. Thank you very much, Swee Yong. Sorry we've run out of time, but it was great speaking to you. Thank you very much for your insights.
Thank you.
And that was Swee Yong, CEO, or Ku Swee Yong rather, CEO of Century 21 Singapore on the new draft master plan released by the URA. And the master plan, of course, is on display at the URA Centre and the URA website, and you have until the 19th of December to give your feedback. So let's go for